Let's bring in FirstMark Capital founder and partner Rick Heitzmann to hopefully provide us some answers. Good to see you.
Hey, great seeing you.
So, a lot of people are asking that question, and maybe some are sick and tired of it being asked and having to talk about it. But do you see any similarities to what's happening now to what happened then? What do you think generally?
What happened then being in the dotcom bubble.
Yeah,
and how that
the
inflated.
only then that's relevant to now, right?
I think it's the most common one. I mean, you go back to the railroads is the other one that people have used as an analogy, where you just couldn't stop the capex. And there were several people who just wouldn't stop investing. I think the difference here, which will affect the timing of that bubble, is largely this capital is coming from earnings, right? So the hyperscalers, the Googles, the Metas are generating enough earnings to continuing doubling down, and they're not relying on the capital markets for that money the way that the telecom infrastructure and internet infrastructure guys did 25 years ago.
So the capex is the key.
Yes.
Is that how we as investors should focus on what's happening and when to determine that, okay, things have gotten to the first blip of a pullback in spend? I mean, that's going to be a little too late.
It'll be too late. You always overinvest. Like CapEx, you don't know until it's way too late. You've already made commitments. You have a lot of money in the ground that you're expecting medium-term ROI. And by the time they see that ROI is not coming, there are trillions of dollars of bad spend behind them.
I mean, Mark Zuckerberg sort of alluded to that. I think it was last week. You know, in the if. It's like, if we end up spending all this money and it doesn't pan out, well, that's going to stink. I don't think it's going to get to that point. But, I mean, it's always out there as the principal risk in this whole story.
No, I think there is going to be a point where either the bubble pops or it just deflates, where it's going to be very clear a lot of people spent way too much money on way too much infrastructure, and it'll take time to grow into it. But timing is everything. So when does that happen? And it doesn't seem like it's happening anytime soon.
The announcements that we've gotten recently from NVIDIA and Open and some of these other companies have obviously been astounding, right? The numbers keep getting larger to the point where some who watch the space are even pulling back their view on where they thought we were. I want you to listen to what Gene Munster told me the other day, and we can react to it on the other side.
A few months ago, I thought we're in the third inning of the AI build-out, the AI trade. Now I think we're in the second inning, and that's based on what we've heard from the big capex, the big spenders, hyperscalers after the June quarter. I think there still is a massive amount of investment. I think that investment will lead to these valuations going higher.
Gene knows the tech landscape as well as anybody, and you go from, well, I think we're in the third. No, now I guess we're in the second, and then tomorrow someone's going to turn around and say, we're just getting started. We're just up to bat for the first time.
I think that's an over-exaggeration. I think in terms of spend, we probably are in the third inning because you have to build out that infrastructure in hopes that both revenue and profits will come, and you're going to get a return on investment on that infrastructure. And people are making commitments long-term, decades-long commitments to CoreWeave and some of the infrastructure and even energy providers. But I still think you're starting to see some of those ROIs come. I mean, you're seeing significant ROI on some of the coding applications, both Copilot as well as the independent folks. And you're starting to see AI work. And you're seeing it in your day-to-day life through use of ChatGPT. You're seeing it in chatbots as you interact with enterprises. So the working only fuels more and more spend.
How is an incredibly successful venture capitalist looking at what's happening in the private market? So if you say that OpenAI's valuation in the private market is $500 billion, right? Yeah. And climbing. It could be bigger than that next week.
Yes.
Literally the way all this is going. And Anthropic has its own at 183. And XAI at some $200 billion. Now, who knows when any of these companies are going to go public? That, you know, is OpenAI going to go public at $1 trillion valuation? I don't even think that's ridiculous to ask the question. How do you assess whether there's a bubble in the private market?
So I think if OpenAI went public at $1 trillion market cap tomorrow, it'd be wildly oversubscribed. I think that everybody has kind of bought into this. This is going to be a fundamental company, and a couple of the companies you mentioned will be fundamental companies. So when do you know when to stop? So the private markets are even less fluid, less liquid, with a lot less information. You're seeing, though, incredible financial metrics. Anthropic has been upping their projections every quarter. They're blowing through their projections. You're seeing some of those same dynamics in some of our companies, both on the consumer and consumer and enterprise AI sides. So as these companies continue to beat their numbers, it only fuels more and more people saying, hey, how far could this go? With the bulls saying this could go on for a long time.